Okay, let's get into this. Sam's Club seems to be making some really ambitious moves lately.
Yeah, definitely. For a long time under Walmart, they felt a bit quiet, maybe, in the warehouse club space.
Right, compared to Costco, certainly. But now it looks like a direct challenge is brewing.
It certainly appears that way. They're making significant strategic shifts.
And if you find this kind of analysis interesting, please do take a second to like and subscribe. Helps us bring you more content like this.
So yeah, the contrast with Costco's approach is quite stark, historically speaking.
How so?
Well, Costco's always had this very steady, long-term game plan, consistently adding 15, maybe 25 new stores a year.
Slow and steady.
Exactly, and always tweaking operations. Their management style is often seen as, well, cautious, but very focused, vigilant even.
Whereas Sam's Club.
It felt less prominent within the whole Walmart picture, but clearly Walmart now sees huge potential there.
And they're putting serious money behind it.
Big investments are planned. They're not explicitly saying we're going to beat Costco, but you read between the lines.
The investment levels suggest that's definitely part of the motivation, right? Inspired by Costco's success.
Precisely. And we got a much clearer picture at Walmart's recent Investor Day.
Ah, yes. The CEO, Chris Nicholas, laid out the plan.
He did. Gave quite specific details. And a key theme was membership. Growth, yes, but also loyalty.
So it's not just about sales volume. It's about keeping those members engaged long term.
Exactly. That seems central to their model. Nicholas pointed out they've had a strong growth recently. The foundation is solid.
But members want more.
Apparently so. He mentioned members are looking for more and faster advancements, faster progress.
So how are they responding?
They're refining their value proposition, what they actually offer members, sharpening their focus.
And using the Walmart connection.
Leveraging those synergies, as they call it. Using the wider Walmart infrastructure and knowledge base to speed things up.
All aimed at driving growth for the parent company, Walmart Inc.
That's the goal. And some of the targets are, well, quite bold.
Like the membership goal.
Yeah, aiming to double their membership in the next 8 to 10 years.
Double, wow. And presumably sales and profits follow.
They project more than doubling sales and profits in that same time frame. It's ambitious.
How do they plan to achieve that kind of growth? Technology seems to be a big part of the answer.
Critical. Absolutely critical, both in the physical clubs and online. It's a multi-channel approach.
So integrating the digital and physical experience.
Right. They expect growing the digital side will really accelerate progress and set new standards for what members expect.
Okay, let's talk specifics on the tech front. Scan and Go seems huge for them.
It really is. That's the app feature letting members scan items with their phone and skip the checkout line.
And adoption is high.
In their test stores, like the one in Grapevine, Texas, they're saying usage is nearly 100%.
Nearly 100%. That's impressive buy-in.
It is. And then there's the Just Go system.
The AI-powered checkout, an Amazon Go.
Sort of, yeah. Computer vision, cameras, sensors, tracking items. They rolled this out incredibly fast.
How fast?
Across all stores in under a year. That speed is really notable for that kind of tech deployment.
Definitely. And beyond checkout, what else on the digital side?
They're pushing e-commerce hard to boost growth and profitability. Things like free shipping for their Plus members.
Right, incentivizing the higher tier.
And free pickup for the regular club members, making online ordering more attractive.
Plus advertising.
AI-powered personalized advertising. Using data to target offers better.
And we can't forget the private label, Members Mark. That seems important too.
Hugely important. Nicholas said it accounted for roughly half their merchandise sales growth over the last 2 years.
Half. So their own brand is a major draw.
It seems to be. It's a key part of their value proposition.
In online sales overall, you mentioned e-commerce is a focus. Where does that stand?
They see it as their biggest opportunity, really. A way to have a digital relationship with every member, not just when they visit a store.
Through digital membership cards and things like that.
Exactly. And e-commerce is growing aggressively. It's already about 15% of sales if you exclude fuel.
Okay, 15% now. And the goal?
The target is 40% within that 8 to 10-year plan.
40%. That's a massive shift towards online.
It is. And things like express delivery are fueling that. They mentioned triple-digit growth in delivery.
So tech and online are huge. What about the physical footprint, the actual clubs?
Big plans there too, renovating all 600 existing locations, every single one.
Wow. And new stores as well. I thought they'd closed quite a few a while back.
They did. Back in 2018, they closed 63. But now the plan is about 15 new stores every year.
So a significant acceleration from their previous plan, which was, 30 over 5 years?
Exactly. It's a major strategic shift on the physical front too.
And the renovations, what will those look like?
They're modeling them after that that Grapevine, Texas store that reopened late last year, the focus is very much on that cashierless experience.
Relying heavily on scan and go.
Primarily. They have member experts near the entrance to help people, but the traditional checkouts are gone.
And how did members react there?
The company reported most members preferred it, even in the first week.
Interesting. Does the new design do anything else?
Yeah, it also lets customers browse items that are only sold online, add them to their scan and go cart right there in the store, and have them shipped.
So blending the online and offline inventory display.
Right, further integrating those channels.
And are new stores actually opening now?
Yep, they announced 2 for this fiscal year, Tempe, Arizona, and Lebanon, Tennessee. First time in those cities.
And more planned.
Construction is starting on 7 more this fiscal year to hit that target of about 15 openings per year.
They're certainly putting their money where their mouth is.
Yeah.
But all this is happening against a backdrop of economic uncertainty.
Definitely. Inflation, tariffs, potential slowdowns. Even Walmart had to revise its own profit forecast recently because of rising costs.
So is it risky to expand so aggressively right now?
You could argue that. But CEO Nicholas seems optimistic. His take is that warehouse clubs, being focused on savings, might actually become more relevant in tougher economic times.
That makes sense. People look for value when money's tight.
Exactly. And historically, warehouse clubs like Costco, BJ's, they did well during the pandemic, partly for that reason. People wanted bulk buys and value.
They also seemed pretty resilient to supply chain issues compared to some other retailers.
They did manage that relatively well and tried to absorb some of the inflationary price hikes, too.
Of course, Sam's Club isn't expanding in a vacuum. What are the competitors up to?
Right. Costco isn't standing still. They've got around 620 U.S. locations and plan to open about 28 new ones this fiscal year, including a few relocations.
Still steady growth from them. And BJ's.
BJ's, mostly on the East Coast, is also expanding. They're planning 25 to 30 new clubs over the next 2 fiscal years, moving into places like Florida, Georgia, Tennessee, Texas.
So the whole sector is pretty dynamic. How has Sam's Club been performing recently in terms of numbers?
Pretty strongly, actually. Net sales hit $90.2 billion last fiscal year, ending in January. That's up about 53% compared to before the pandemic.
53%. That's significant growth.
It is. Comparable sales, excluding fuel, were up almost 6% year over year. Transactions, both online and in-store, increased over 5%.
In e-commerce.
E-commerce jumped 24%, really driven by people ordering online for pickup or delivery.
Do we know how many members they actually have?
They don't release that total number publicly, but they did say membership income grew 13% in the last quarter, so more members or more plus members or both.
Okay. And the cost of all these renovations and new stores, any specific figures?
Nicholas didn't give exact numbers for Sam's Club specifically, but Walmart, the parent company, is definitely increasing overall investment.
Across the board.
Yeah, store upgrades, supply chain automation. Their total capital expenditures were nearly $24 billion last year.
And this year?
Projected somewhere between $20 and $24 billion again. That includes money for supply chain tech, store remodels, and specifically these new Sam's Club locations.
So, summing up, it's a really aggressive strategy. Big focus on membership, major digital push, overhauling the physical stores.
Absolutely. They're clearly positioning themselves as a much stronger contender in the warehouse club market.
It'll be fascinating to see how it plays out, especially against competitors like Costco. The ambition is definitely there.
For sure. Whether they can execute on all these ambitious goals and really challenge the established players, that remains to be seen. It's definitely one to watch.
Indeed. Well, that brings us to the end of our look at Sam's Club's plans. If you found this useful, we'd appreciate a like and subscribe for more analyses like this one.
Thanks for tuning in.